Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're going to discuss an interesting development in the mortgage market. Fixed rates are creeping up, and variable rate discounts are shrinking too. This is a significant shift that could impact many potential home buyers and current mortgage holders.
That's right, Steve. It seems like some of the lowest fixed mortgage rates have disappeared in recent weeks, and lenders are quietly tightening up their variable rate discounts. This is happening gradually, but it's definitely noticeable. Ron Butler from Butler Mortgage mentioned this trend, noting that high-ratio 5-year fixed rates, which were as low as 3.64% earlier this month, have jumped by 10 to 20 basis points.
Yes, and it's not just about hedging costs or swap costs. Butler highlighted that there's enough uncertainty in the market, and the big banks want to cover their bets in case there's a sudden rate move that leaves them in a bad spot.
It's really interesting how this pattern isn't new. During the 2008 financial crisis, lenders also pulled back sharply on discounts for variable rates. Today's environment is marked by uncertainty, not just around rates, but also broader economic signals, including tariffs, global trade disruptions, and stock market volatility.
Exactly, Janine. And even though the discounts on variable rate mortgages have been shrinking, some experts argue that variable rates could still prove cheaper over time. Dave LaRocque, a mortgage rate expert, noted this in a recent blog post. He believes that if the Bank of Canada cuts rates more aggressively, variable rates could come out ahead in the long run.
That's a great point. LaRocque adds that bond markets are currently pricing in just 2 more quarter-point rate cuts, but he thinks the Bank of Canada could ultimately cut by 0.75% or more if recession risks materialize. This could push variable rates even lower.
And for those who are considering their options, Ron Butler suggests locking in a sub-4% 5-year fixed rate if possible. He emphasizes the importance of mortgage term flexibility, especially for those expecting a life change within the next few years. A variable mortgage might be more beneficial in such cases because of the lower penalty and greater flexibility.
Absolutely. It's all about finding the best option for your personal situation and future plans. Whether it's sticking with a fixed rate for stability or opting for a variable rate to take advantage of potential cuts, it's crucial to weigh the pros and cons carefully.
In a significant legal development, the Ontario Superior Court of Justice has appointed B. Riley Farber as the receiver for Sussman Mortgage Funding Incorporated and certain related companies. This decision arose from an application by the Financial Services Regulatory Authority of Ontario, or FSRA, under the Mortgage Brokerages, Lenders, and Administrators Act of 2006 and the Court of Justice Act.
This is a critical step, Steve. The appointment of a receiver came about due to allegations of serious wrongdoing and multiple legal proceedings initiated by mortgage investors. The receiver's role is to manage Sussman Mortgage Funding's affairs in the best interests of all its investors, which is a relief for those involved.
Absolutely, Janine. It's important to note that B. Riley Farber has been tasked with reporting to the court by June 2nd of this year. This ensures that the proceedings are transparent and that all stakeholders are kept informed about the developments. As of March 31st, Sussman Mortgage Funding had no licensed brokers, and their brokerage license was already suspended. Subsequently, FSRA has revoked both their mortgage brokerage and administrator licenses.
The establishment of a case website by B. Riley Farber is another positive step. This website will provide public access to the materials filed with the court and the court orders, ensuring that everyone involved or interested can stay up to date with the case's progress.
That's right, Janine. FSRA's ongoing efforts to work on behalf of all stakeholders, including consumers, are crucial in maintaining financial safety, fairness, and choice. This case exemplifies the need for strict regulatory oversight to protect investors and the general public.
It's a reminder of the importance of vigilance in the financial sector. For consumers, resources such as FSRA's guidance on detecting and preventing mortgage fraud can be invaluable. They can also file complaints if they suspect any malpractice. This kind of support is vital for maintaining trust in the industry.
Indeed, Janine. This development with Sussman Mortgage Funding Incorporated highlights the importance of regulatory bodies and their role in safeguarding the interests of investors and consumers alike. Keeping informed and aware of such issues is essential for everyone involved in the mortgage and real estate industry.
Well, that wraps up our discussion for today. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder: Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals.
Catch you next time and stay informed with the latest industry insights.